All right, everyone, so we're going to jump in here to Chapter 8. So this is Intro to Momo. Those of you who have Momo FOMO, I feel for you. Momentum trading is all about buying stocks that are strong, buy high, sell higher. We have seen in the last year more momentum in the market than I had ever seen previously in my entire career, and I've been doing this for a long time. So we are in unprecedented times. I would say that this is perhaps the new stock market economy, the new stock trading economy. Just the fact that trading has never been more accessible from your phone. We know, of course, so many Robinhood traders buying GameStop just from their phone can participate in the market. 20 years ago, 30 years ago, during the dot-com bubble, that was the previous peak in interest in day trading. If you look at trends and things like that, we peaked in day trading interest during the dot-com bubble, so 1999, 2000, 2001. And then interest in day trading faded, market surged up, and then interest in day trading came back 2008, 2009, 2010. The big market, the Great Recession, and then the market recovery. And then interest in day trading kind of faded again. And then it came back in 2017 with cryptocurrency, Bitcoin crossing 20,000. And then it kind of faded 2018, 2019, and 2020. It came back bigger than ever with the pandemic and the shutdown and people realizing that from their homes on their laptop or computer while they were out of work, maybe they could start dabbling in the market, playing the market, trading the market. And so as a result, Robinhood, E-Trade, Ameritrade, all of these big brokers reported that in Q1 and Q2 of 2020, they were seeing 100% increase in new accounts, millions and millions of new accounts being opened. So many people coming into the market. Combination of accessibility, great technology, the software for trading, everything has made it easier to participate in the market. And so the result now is that there's a lot more buying power behind some of these big moves, certainly in stocks like Tesla, in the price of Bitcoin, but also on a day-to-day basis in individual names. So in Chapter 7, I laid out for you the gap and go strategy, which is a momentum strategy. We're trading momentum, buy high, sell higher. However, the gap and go was sort of what I set up as my first, what I thought was kind of the simplest momentum strategy, trading stocks gapping up. And I encourage you guys not to try to master every single sub-strategy of momentum that I teach. This chapter here, I want to say it has 10 or 12 different sub-strategies. Just like Chapter 7 had, 7 or 8 sub-strategies, this one has even more. It's not your job to master every single one. Ultimately, it's your job to find one that works for you, one that resonates with you, one that you can trade predictably, comfortably. And I would say probably for most of you, in the gap and go section, it's going to be trading the first pullback, because the first pullback requires that you watch it squeeze up, not chase it. If you do a $half whole dollar entry, you're chasing. So if you let it squeeze up, then you let it pull back, you're buying that pullback entry. So naturally, the first pullback and second pullback are sort of, in my opinion, the safer and the more obvious gap and go strategies. And that's the same with momentum. So the only difference with the first pullback in the momentum chapter, which is going to be Chapter 8, Part 1, or Setup 1, is that we'll trade the first pullback at any time during the day. Maybe we trade it pre-market, and technically it's a gap and go trade. Maybe we traded it 2 in the afternoon. And in that case, it's not really a gap and go. It's just a momentum trade. All right. So why don't we jump in here with this section? And again, wanting you guys to stay focused on that end goal of, can you make 10 cents a day per share? Yes, with 10 shares, that's not a lot of money. With 100 shares, it's $10. With 1,000 shares, it's $100 a day. And I bet every single one of you would be more than happy. You would feel really good about yourself if you were consistently making $100 a day, because once you're consistently making 100 a day, ultimately the only difference between 100 and 200 is increasing your share size. So can you make $10 a day? Let's set the bar even lower. Can you just make $10 a day trading with 100 shares? Small size. Don't worry about commissions right now. Commissions, yes, they're going to be a big piece of the pie with tiny size, but once you get past that and you start scaling up, it's not a problem. So importing your trades to TraderView, looking at your metrics, if you choose to use TraderView at least, looking at your metrics and asking yourself, okay, what's my profit loss ratio? What's my, that's my profit loss ratio from that little window of time. It's crazy, but good profit loss ratio. What's my accuracy? Does this all sustain increasing my share size? If I made $786,000 trading with this profit loss ratio, an average daily volume of 1.4 million shares, what would happen if I trade with an average daily volume of 3 million shares? If I doubled my size, would I have made $1.6 million? I don't know, but I can start slowly scaling up and we'll see what happens. So you're going to do the same thing, but you're starting at the very bottom. Now, again, my job is to try to send the ladder back down from someone who's kind of made it, not necessarily to the top of the mountain, but from someone who's done pretty well. My job is to send the ladder back down and help as many of you as I can make your way through the journey to find that path to some form of confidence in the market. We know it's not going to happen for everyone, but I'm going to do everything I can through this entire course to teach you everything I know that can only help you. All right, so yes, you can export trades from the simulator and import to TraderView. But you know what? I'm not going to get into that right now. We did talk about that at another section of the class. I believe it was actually at the end of the starter. So let's just keep on topic here. And those that are not totally familiar, you can go back into the end of the starter class where we talk about it and just refresh there. Or if you need to ask someone in the trader lounge or support room, that's fine too. So momentum trading is my strategy. This is my go-to. All right. I love trading stocks, gapping up. That's what I do every single day. The gap and go strategy, in fact, is actually a subset of momentum. Momentum is not a subset of gap and go. Momentum is the overarching strategy, and maybe someday I'll swap these courses to teach chapter 8 at 7 and 7 at 8. But I teach the gap and go first because, to me, I think the gap and go is sort of the easiest setup to understand. It's the easiest way. It's so easy to find stocks on our gap scanner and then find that first pullback. Whereas momentum, as it gets later in the day, just momentum in general can start to get a little more complicated. But any stock gapping up has momentum. In fact, any stock moving up has momentum. But the gap and go strategy applies really to trading stocks in the first 15 minutes of the day and now, of course, pre-market. And it is, I would say, in my opinion, the most consistent and the easiest strategy that I've developed. That's not to say that I think it's easy, but as far as my strategies are concerned. Many of the examples that we look at in this chapter could have easily been included in the gap and go chapter if the stock was a gapping stock. Some of the examples in this chapter were stocks gapping up, but after the first 15 minutes, the gap and go strategy, they continue to provide what we would just sort of say are general momentum setups, break a VWAP, maybe first pullback, maybe flat top breakout, maybe half dollar, whole dollar entries. So you'll see a lot of overlap between gap and go and momentum strategies, and the main thing that differentiates is really time, but you will see some overlap. You will see some of the same examples, and so as you go through chapter 8 here, even if your focus is to primarily trade the gap and go strategy, you should still absolutely watch all of chapter 8 because this is only going to provide more context and more insight into the way we trade the gap and go stocks. So once the gap and go trades are usually finished, 9:45, 10 a.m., then we just start to kind of look for general momentum in the market anywhere we can find it. And that means we're watching typically the high-a-day momentum scanners. So this is an example of momentum. It's kind of a midday runner, midday momentum stock, squeezes here around 12:30, pops up to $55, goes sideways for a minute, squeezes up to 57. This is a flat top breakout, also a first pullback, surges through 57 up to 58. Pulls back 58.50 up to 59.50, topping tail reverses off the top. So while this is a $55 stock and maybe not something that we would have been really in love with, this is clearly volatile. And within that volatility, we may be able to find opportunity if the relative volume is high enough and if we believe that this stock is still obvious, remember, as per chapter 3 of the Pro class. Are we trading the right type of stock? It always comes back to that. And it always comes back to, are we managing risk effectively? Here's another example, a momentum midday, a stock that was a gapper and gave us a very nice gap and go trade from 250, surging up to 350. First 5-minute bull flag pullback. It's a little premature, but it rips higher and surges, as you can see here, up to the high, 444. It then pulls back a little bit, consolidates, breaks out. This is now an 11:30 a.m. trade. We wouldn't really say that setup there is gap and go. We would say that that's just a momentum trade. And this just kind of surged quickly here, but on the 1 minute likely gave micro pullback opportunities. Okay, now what creates momentum? Well, I think that we all know this by now, but at the sake of being redundant, let's just say momentum is caused by an imbalance between supply and demand. Extreme momentum, parabolic moves. In other words, when a stock basically goes straight up, all right, those are extreme imbalances between supply and demand. And they represent the crowd mentality that every stock market experiences. Traders flock to one stock and then abandon it and jump to the next. And sometimes it feels like a shark feeding frenzy. And the momentum is that little piece of bait in the water that just gets all these hungry sharks looking for the opportunity. And I say that just because of the exuberance and the aggressiveness and just that peak of emotions. I think we could all imagine it. Let's say, let's just Google shark feeding frenzy. I bet there's a perfectly good YouTube video of this. Let's see. So let's see, we're gonna get a little commercial here for HelloFresh, and then I'm gonna skip the ad and let's see what we've got. Let's see, so. All right, so we've got some sharks here. And the feeding frenzy, I think it's about to begin. So we're all, oh gosh, this is gonna be brutal. So we're all waiting for that one stock. We're all traders. We're all waiting for that one stock. Now, you wouldn't believe this. This was filmed by Uncle Steve. Yeah, he was diving. He was in a swimsuit. And he jumped in and he said, I'm getting my camera. I'm gonna get this for Ross, and then I'm gonna send it to National Geographic, because why not? So he became a deep sea diver. Now things are getting crazy. Now, the sharks might accidentally bite each other. They might even bite their own tail. Things are going so crazy, it's a feeding frenzy. It's wild. And sometimes trading is certainly like that. And then things slow down, they calm down. And so when we see these stocks make really, really big moves, we know that traders out there, if we're all as traders, we're the sharks and the stocks are the kind of sardines, that we're all trying to get a piece of the action. And sometimes we get hurt. Sometimes we take losses. We bite ourselves. We bite another shark. We get bit. And it's just a wild kind of moment there. And then it starts to kind of cool off. And every market experiences this, whether it's the real estate market, obviously with subprime, the housing crisis in 2008 and 2009, or it's Bitcoin and the crazy move up and then the huge, huge drop, or it's the dot-com bubble, or it's everything we're seeing in the market right now, the big move on GameStop. Those are feeding frenzies. And within those crazy, crazy moves, clearly within that volatility is opportunity. And I think we want to be mindful that it's certainly not our intention to be taking advantage of other traders out there, other sharks out there. But when a stock is making a big move, we want to get that piece of the action. We want to get that piece for ourselves. So in the real estate market, you're buying and then you sell higher, and then you buy back, you sell higher. And you know that there's some people out there that bought at the top. And some of them will sell as things start coming down, and some of them will hold and hold and hold forever, and they're holding something at a crazy value. And that's what we want to try to avoid. As part of our risk management, we got to know when to cut our losses. We want to know when to say, you know what, enough's enough. Let's take the money off the table. Let's cut the loss and move on to something else. But momentum is an imbalance between supply and demand. So when one stock is strong, many others follow. This is very, very common. And in fact, even just today, we saw CLEU, which is a Chinese company, make a big move. And we saw a couple other Chinese stocks in a similar sector, which is education, also making big moves. We saw a stock that we had traded a few months ago, WNW, which was a recent IPO stock, made a big move here. You can see this surged from $7 up to $160. That was back in December. Today it started to kind of spike up. SPCS, this one also made almost, SCPS, also a very similar move back in December, also started to pop up today. A little bit of sympathy momentum. That's very common. And so when things start to heat up, traders who missed setup one, stock one, they look for stock two. So, just think about it. Let's just say you missed GameStop. You missed the huge move from 50 to 500. The next stock that starts to pop up that everyone says is going to be the next GameStop. It's the next stock that everyone on Reddit is excited about, whatever. You know that that's going to get a lot of people buying it who are overcompensating for the fact that they missed the last one. That's just natural trading psychology. That's just the way it works. We're all prone to it. We can all fall victim to it, but we can also capitalize on it. So perhaps it's some of the older sharks out there that have a little more experience, that have some battle scars, that have learned, when to be more aggressive and when to start to step back and let the little guys fight it out. And I hope that we can all get to the place of being that seasoned trader without getting too many battle scars. So it's very common, therefore, that when I start to trade well, I'll have a very nice streak, like I did here, a little window here where in 4 days, 5 days, I was up 34, 55, 200, 478, and then 114. That was an amazing week. But then it's also not uncommon that when things slow down, losers get clustered together as the market is just slow and there's not as much momentum, there's not as much opportunity. And if I don't slow down and step back and wait for something else, I'm going to keep getting hurt. So how do we find momentum? Well, we can find momentum trades during the day on our high day momentum scanner, and we can also find potential momentum stocks on our gap scanner and then watch them as they continue to move higher. So the high day momentum scanner is looking for stocks hitting new highs on high relative volume with a volume spike. This is exactly the type of indicator of high retail interest. We find gap and go stocks usually with a gap scan, momentum trades with the Momo scanner. So we have these tools, which you're fortunate that are right here at your disposal, that help us find stocks in real time. This is what we essentially use for idea generation. So this helps us give us ideas. We might not like all of them because, of course, we have to do our due diligence of, is the stock, what's the float, what's the price, what's the relative volume, what's the catalyst. Now, we could filter our scanners to only show us stocks that have the perfect float, the perfect price, and maybe the perfect amount of relative volume and the perfect catalyst. The only problem there is that if we do that, we may not realize that there's something else in the market that more traders are watching that may not fit within our strategy, but is probably the one that everyone's watching today. And so for my gap scanner, I don't use any filters other than up 5%. And above 50 cents, because I don't look at really cheap stocks. But above 50 cents and above 5% gives me a pretty broad look at the market. And so I can say, without much of a bias, focusing on my strategy, whether or not a stock I like is truly the strongest stock in the market today. Because if I'm looking with a really tight filter on my scans, I might perceive that it's the best and not realize that if I took those filters off, there's something else out there that maybe people would think is more obvious. So learning to read the scanners is certainly important. We have already gone through scanners and reading them as part of the Warrior Starter class. We will talk about them a little bit more in the Pro class in a little bit more depth. I think at this point, you can all read the scanners likely well enough to be able to use them. So I'm not going to go into any more here, but if you feel you need to have a refresher, you can certainly go back and refresh during the starter class. So here's a perfect example of momentum. This was definitely a gap and go stock right here at the open. It pulls back, it rips higher. And then at this point, 9:45, we could say that's the first 5-minute pullback on a gap and go stock. And it is. And then at this point here, it's 10:30. At this point, it's just kind of momentum. Yes, it was a gap and go stock, and that's all fine. But clearly, the setups in this area, we would be finding these on our high day momentum scanners, and this would be a pullback setup. Multiple 9 moving average pullbacks, kind of tapping that level and moving higher. Nice bull flag pattern. These type of pullbacks give us the opportunity to buy a strong stock without chasing it. And again, just to reiterate what we talked about in Chapter 5 of intraday chart patterns, the reason these patterns work is because so many traders recognize and read this same language. So if you start using really obscure indicators or you decide to switch to some type of chart that you might think looks really nice, but most people aren't using, likely you're going to find that the price action, the resolution is not as predictable because the areas where you are seeing confirmation are different from what the crowd is seeing. Okay, so again, it's not to say maybe there might be times where that does give you some advantage and you do get to the exit before other people, but I think generally looking at pretty much the same thing as other people makes the most sense. Another example here of a stock that was strong at the open, a little bit of a gapper on light volume. This was back in 2016, and of course at that time we know that stocks would gap up on very light volume and then surge at the open. So this may well have been a gap and go stock, but then here at 11:30, this is really where it picked up. It surges up here, pulls back, surges higher, pulls back, goes higher. First and second pullback, a little choppy as it gets to the top. Another example, PRGN. Not even a gapper, just kind of sideways at the open versus the close. Clearly a little pop and then back down. Technically is a red to green move, but probably not one that we would have traded because this wasn't a gapper, so we probably wouldn't have been watching it. But then when it's squeezed up here, it's hitting our high day momentum scanners. So we pull up the stock, we check the float, we check the daily chart, we look for the catalyst, and then we say, okay, I'm gonna wait for the first pullback. It starts to pull back here on the 5 minute. That's the first 5 minute candle to make a new high. It rips higher, starts to pull back again on the 5 minute. First 5 minute candle to make a new high, rips higher. 2 nice trades. So to give you kind of a basic momentum trading strategy checklist, the time frame really is all day. The most momentum is typically at the open, and then we see momentum again at the close. Midday can be a little tricky, but sometimes we get into these little, rhythms where we're just seeing midday momentum. And, if the sharks are starting to say, well, gosh, every time the clock strikes noon, we're seeing momentum until 1 o'clock, well, then people are going to be looking for opportunities at those times. So those can be patterns that come and go. The stock type, as always, lower float is going to be better for parabolic moves. Certainly under 50 million shares and under 10 and 5 is even better. There will be times where we see stocks trending nicely that are much higher float, and those can be okay, but they can be more difficult to day trade because they don't break out of those bull flags as quickly and as strongly. So they're more of long trending stocks. Again, that's fine, but not as instant resolution. The range today should already be up at least 10% or at least 50% to be considered parabolic. Relative volume should be at least twice average, 2 times relative volume. The daily chart should be above the 9 with room to the 200 or above the 200. Requirements, the stock should ideally have a catalyst or be a former runner. That's always ideal. But a technical breakout is okay. A technical breakout is what we saw today on WNW. No news on it. That's my news window. There's no news. But it went from $20 to $32.50. So, they can work, but we always prefer news. Price range, I do prefer the lower price range, $1.50 to $10. But as you saw on WNW, higher price can be okay. And sometimes we get into these rhythms, just like different times of day, where we're just seeing a lot of momentum on stocks in the $1.50, $2 price range. One stock goes from $1.50 to $8 in one day, and next thing you know, every stock at $1.50 that starts popping up, people are like, is this going to be the next one that goes to $10? So we start to get a little bit of a rhythm there. Or maybe we have a stock that goes from 15 to 25, and then the next 5, 10 stocks that are at 15 that start to pop up, traders are jumping on aggressively. Recently, it's kind of been stocks in the $20 range, where we see these moves from 18 to $28, $38. It's crazy, but that's the range. Now, with a small account, we certainly know that under $10, those stocks will allow you to take larger positions. And a stock at the price of $10 can very quickly go up 30, 40%. A stock at $20, 30, 40% is quite a bit more difficult. So lower price, bigger percentage movers, but we have to focus on where the opportunity is in this current market. If it's not at $1.50 to $10, but it's at 15 to 20, then that's the place I'll probably focus. Usually, though, higher price stocks, I will focus more on 5-minute patterns because a higher price stock can have a lot more range, can be a lot whippier, and can have false breakouts that are really violent. And those can just instantaneously be a big loss, actually like it was for me yesterday on a $24 stock. So an entry will be any one of the setups that we'll discuss during Chapter 8. Now, parabolic setups are also valid when a stock is up more than 50%. When a stock is up more than 50% and is going parabolic, that's when I'll sometimes start to take these sort of really risky trades as it's just squeezing higher, moving higher, and ripping. Those are appropriate at the right place and time, the right stock, but are not appropriate on a stock that's not parabolic. And of course, we find the stocks on our gap scanners and our Momo scanners. Parabolic momentum is kind of like momentum on steroids. The stock went from $250 to $57. It's when they go up in excess of 10% in 5 minutes, typically more than 50% in one day. Sometimes we will see this going down, stocks that drop, but more often it's with stocks going up. A typical momentum stock, we might say, has the potential to go up 20 to 30% in a day. whereas a parabolic stock can be anywhere from 50, 500 to 1,000% in a day. It's, just straight up. And, I'll say that when I was first getting started trading, I never seemed to capitalize on those well because they would move so quickly that I would just feel like I was missing the opportunity. They would just go so fast that where's the pullback? Where do I get in? And as I've gotten more experience, I've gotten better at reading level 2, I've gotten better at visualizing those micro pullbacks, I've been able to start capitalizing on them actually really well. So I think that may be something that comes more with time and experience. Fast breakout trades on momentum stocks, that's going to be a 1 second to 10 second, 30 second, 1 minute long trade where you're in and it immediately goes and you're out. Stocks can move very quickly. These momentum stocks can have incredible range, which means in less than a minute, they can spike up $1 a share or be down $1 a share. This wasn't the best example today, but this is a 1 minute candle on this stock that has a low of 25 and a high of 29. That's $4 a share in 1 minute. 1,000 shares, that's $4,000, right? Now, up or down, depending on which way you have the share, so long or short. So this is definitely in 3 candles here. This went from 20 to 27. So again, when I talked about how fast can you be, it's very relevant if you want to try to capitalize on some of these parabolic stocks that you try to learn to be pretty quick. So in order to trade those really fast moving breakouts, you'll need hotkeys. You'll want to have level 2 time and sales. You want to get good at it, and you'll have to be willing to react quickly to the market. And that may not be where you're at right now, and that's okay. You may be focusing right now more on 5-minute pullbacks, stuff like that, not trying to get as aggressive on the parabolic stocks, or perhaps when you do wait for the 1 minute pullback, which is kind of like what we had right here, rather than trying to just buy it at a $0.50 or a whole dollar as it's surging and take that quick profit. Either way is fine, but just if you are thinking about trying to trade them as quickly as you may see me at times trading them, you'll have to make sure you've got the right tools and you have to practice. So the momentum trading process: find a stock on the Momo scanners, check the news, break down the daily chart, look for support and resistance. Choose a potential entry based on one of the setups. Now that I know the rough price I want to enter, the first 1 minute candle to make a new high. So in the instance here of this stock, WNW, I'm watching it as it's hitting my scanners here, and I'm saying, okay, I'm waiting for it to pull back. It starts to pull back. Okay, well, what's the high of this candle? And let's just say I've already done the other stuff of, okay, this one doesn't have news, but the daily chart's good. It's a technical breakout. Okay, the high of this candle right here is 28.45. Remember, in this box shows the high of that candle. So the high is 28.45. Okay, we've pulled back. The high of this current candle is 26.98. So I'm a buyer over 26.98. First 1 minute candle to make a new high. This candle goes lower. The high is 26.80. It's a green candle, so it based out. Now it's starting to come back up. First 1 minute candle to make a new high is over 26.80. I bought there as it crossed 26.80. It squeezes up into a halt at 29. I probably take some off the table. All right. So once we know approximately the price I want to be getting in at based on the chart, then from that point forward, I'm really focusing on the level 2. I'm looking at, is at 26.80, approximately at the high of this candle, is there a 50,000 share seller or not? Is there something that's telling me to wait? Or is there a reason for me to go ahead and press that buy button and jump in? So once I'm in the trade, I'm still watching the level 2. That's the road ahead. Watching the level 2 and primarily the ask price, glancing at the time and sales, glancing at the chart, and taking profit as it squeezes higher. Sometimes in a hot market, I will keep adding into the move, into the halt, depending on the quality of the stock and everything else. Other times I'll be a little bit more conservative. So that depends on some of the internal factors about where I'm sitting on the month, on the day, on the week, on the month, on the year, where I'm sitting in terms of, am I in a drawdown? Am I in a slump? Am I at all-time highs? Then some external factors of what's the strength of the market, what's the quality of the stock, what's the float of the stock, and again, all of that will help determine whether or not I'm going to be on the offense or the defense on that particular trade. I'll start selling usually as soon as I start to hit some profit targets. And as you know, I have my order entry window right up here. This is from Lightspeed. So I can enter by typing in 2,000 shares and clicking the buy button right here. I can also use Shift 1. But remember, if we look at, we just pull up the simulator for a second, one of the problems with Shift 1 is when you press Shift 1, right now if I press Shift 1 is 5 cents above the ask. So Shift 1 like that, 5 cents above the ask. The second I press it, I'm sending an order to buy 5 cents above the current ask. So if the second it's received at the market, perhaps the stock popped up 5 cents above the ask. Well, if the ask went from 45 to 65, my order is for 65 plus 5, that's 70. I could be getting in 20 cents higher. So sometimes with hotkeys, because of just that moment of latency of pressing the key and it's sending to the market, you can get some slippage there. And so for that reason, I really do like to enter orders in the order entry window as much as I can. So 53.50, by clicking the buy button, I can click it 5 times, whatever, very quickly. And I'm not going to get filled higher than 53.50 if in that moment that I press the buy button, the stock just ripped to 56.50. I mean, that would be a big rip, but on some of these stocks of this price range, certainly on something like WNW, look at how fast this went from 26 to 29. What if your order was delayed? What if your quotes were lagging for a second because, I don't know, someone was messing with the internet somewhere, downloading some stupid video, and now you just press the buy button 4 times with shift 1 and you're in long at 29.06. Whoa. That risk is very, very different from an entry down here at 26.80. So for entering the trades, certainly on parabolic stocks, I do really like to use my order entry window as much as possible, but I will use shift 1 and shift 2. I have to be a little careful, and that's why even for me, shift 1 is 1,000 shares and shift 2 is 2,000. I don't have hotkeys for 5 and 10,000 shares just because of the risk that I could end up getting a really bad fill. Now, maybe down the road, by the time some of you are watching this, I have gone ahead and added a hotkey for some bigger size to be a little more aggressive, but where I'm at right now, I still get pretty conservative. So again, so using the order entry window allows a little bit of slippage, but not an uncontrollable amount. I'll sell half when I hit my first profit target, usually 20, 30 cents with a 10-cent stop, then adjust my stop to being a mental stop at break even. Mental being, it's not a live stop order, but I bail out by pressing the bailout hotkey of Control Z when it stops looking good. Now, common exit indicators for almost all momentum trades, and this is probably true for almost all gap and go trades as well. If I see heavy resistance on the level 2 in the form of a big seller, that 50,000 share seller, I'm out. Now, yes, it's true. If a stock has 500 million shares of volume, I will say a 50,000 share seller is probably not enough for me to bail out. But in a market with less volume, a big seller, whatever big happens to be relative to that day in that stock, a big seller, and I just got in, I got to get back out. All right. If I stop seeing buying and I'm just seeing a lot of selling on the time and sales, I'll bail out, sell on the bid. I'm not even going to try to sell on the ask because if I'm seeing a lot of selling, I'm probably not going to get filled on the ask. Sell orders go through on the bid. If my first profit target is touched, I'll sell half by selling on the ask and adjust stops to break even for the remainder in a more defensive mode. If I'm being a little more on the offense, I might add or I might hold for a bigger move. Second, third profit targets are hit, I'll continue to sell small pieces on the ask. If my entry is on the 5-minute chart, I will typically sell the rest of my position on the first red 5-minute candle. If I'm trading on the 1-minute chart, usually the first red 1-minute candle will be my exit. Again, a reminder, breakout or bailout. If I get in and it doesn't work almost right away, I might as well get out because the best trades work instantly, the worst ones fail instantly, and the ones that are just so-so kind of struggle when you get in, pop up a little, and then sometimes they flush, maybe they go, but they're not going to be your best trades. So if we want to try to focus on trade the best, leave the rest, we should also focus on breakout or bailout. It either works immediately or we're out. We don't want to get caught in those bull traps. It's also important to be honest with yourself about the current state of the market. Is this a hot market where leading gappers are 50, 100% or more and continue to make 50 to 100%, 50, 100%, 200% intraday moves? Or is this a colder market? So if it's a hot market, I'm going to be aggressive. I'm going to add into breakouts. I'm going to hold into possible halts. I'm going to look for those big gaps higher on the halt resumption. In a cold market, leading gappers are routinely failing and fading and closing lower. We're seeing very small breakouts, lots of false breakouts, and then a halt going down, big rejections. This is the time to be more conservative, to trade less, to be extremely fast, to take those tiny profits off the table. It's not the time to add. It's not the time to hold through drawdowns. It's not the time to expect grand slams or home run trades. It's just the time to try to get through it with small gains until we get to the other side where things improve. So during this chapter, same as chapter 7 and same as the upcoming chapters, I'll be showing you many live trading examples. I'll continue to upload live trading examples from time to time, some specifically to this chapter. And if we upload an example that's like a perfect example of the first pullback, to this, chapter 8, setup 1 of, the first pullback, we'll email you guys and let you know, hey, we just uploaded a new example specific to right here. We also have the general live archives section of the courses, which will continue to be where a lot of uploads just sort of go by default. And we also, when some of those get uploaded, occasionally we'll email you and say, hey, this week we've got some new uploads, or, in the last 2 weeks, we've got some really great examples. If you haven't checked them out, you should check them out. We don't necessarily upload or email on every single upload because they're frequent, but yeah, so continue to check those. And as long as you're continuing to be a member of the Warrior Pro classes, you'll continue to have access to all the classes, the live archives, and everything else. Okay, so with that, let's get into Chapter 8, Setup 1, just like the Gap and Go, the first and second pullbacks, except now focusing not just on pre-market and at the open, but also a little later in the day. All right, so we're going to jump in here with Chapter 8, long setup number 1. So this is a technical long setup. Setup number 1, the first and second pullback. I'm going to set this chapter up just like the Gap and Go, starting with what I would sort of think of as the easiest sub setup of momentum, the one that is probably the most common, and the one that probably makes the most sense for you to really try to get dialed in on. Now, I want to remind you, just because, you watch this chapter and you've watched chapter 7 and you're starting to feel a little confident, doesn't necessarily mean you're ready to put real money into the market. Trade and practice in a simulator. Now, to demonstrate this, I actually asked Uncle Steve, what kind of video could we put together that would sort of be a good example of not getting overconfident. And, of course, Uncle Steve was happy to oblige. And so, I actually asked him to dress up like a lady, and he did it. He's a good sport. He's a great sport. So that's Uncle Steve right there, dressed up like a lady. And, he's getting a little overconfident. He's like, I got this first pullback, no problem. Oh, no, that's not bad. I'm still fine. Uh-oh. And that's what happens. Now the towel's around his head. Oh, boy. So this is a reminder. Let's not get overconfident. Let's take it one step at a time. Now, Uncle Steve was, we've been talking a lot about whether or not we can do anything about this situation here. I'm going to make this picture just a little bit bigger. If anyone in this class is a Photoshop wizard and in the next, hour or so has any idea of a way that we could kind of help Uncle Steve with a dream board of what it's going to look like when we figure out this kind of hairline situation. I'm thinking that, I don't know, maybe like blonde and just really like long, or maybe some of Aunt Diana's hair, we could kind of move it over. I don't know. I don't know the answer. This isn't really my area of expertise, but I think there's something that we can do about this. So I'm just going to leave that there for a second. If you have to grab a screenshot of it, and let's see if anyone can work out something really good. Okay. Now, let's get into Chapter 8, long setup number 1, first and second pullback. All right, so you already know this setup. This isn't brand new, right? All we're doing really here is looking for this setup in the context of mid-morning, late morning, early afternoon, etc. All right, so I'm going to read this slide to you, and then we're going to start getting into just the way we did with Chapter 7. We're going to talk about the entry, then we're going to talk about the risk, the target, and everything else. So the bull flag flat top setup, the entry. The first candle, Uncle Steve, you're funny. All right, so entry. The first candle to make a new high. The apex point of the bull flag, the flat top pattern, right? We know that. It's the first candle to make a new high. Sometimes I'll enter early to anticipate the breakout. If I'm entering early, what typically triggers that entry is either a breakthrough a psychological level just below the apex point. It could be that surge of buying on the level 2 and a quick break below, 448 for the break of 450. And I always prefer to have that early entry because it offsets the risk of a bull trap and a false breakout. Sometimes we get in and it ends up being just a total false breakout. And when that's the case, if you got in at the very top at the exact correct entry, you're kind of instantly in right into that resistance. And so sometimes it's not uncommon, for instance, that if someone has been holding the stock, maybe they just happen to put a sell order out at the apex point by coincidence. If the apex point is at 750, that's a $50. That's a logical place to put an order. maybe they just throw a 25,000 share sell order out, but then when it comes up there and looks like it's about to break, we hit that level and then it gets crushed. So taking that early trade to anticipate the breakout, that requires a certain degree of intuition. So as a beginner trader, you're going to be lacking that initially. And so what you're going to want to do is focus on the apex point and closely watch the level 2, the time and sales, as we approach that level. And maybe as a beginner, you're always getting in right as the apex point breaks. But then you start feeling comfortable getting in just a little sooner, and a little sooner as you gain more experience. So when I go red on a trade almost immediately, I often change my perspective from getting out break even, either through adding on a dip, which is averaging down, which is high risk, and selling when it comes back up, or simply trying to get out at the price I entered. So the perspective changes from it being a winner to just getting out break even, if I can just salvage the loss, salvage the trade. So on a first pullback setup, our target is almost always a retest of the high, because remember, the pattern of a pullback is we squeeze up and we pull back a little bit. So naturally the target is a retest through the high. But remember, as soon as it hits high a day, it's going to be back on what type of scanners? High a day momentum scanners. So all those traders using those high day momentum scanners, perhaps as it breaks through the high, that's when they see it for the first time. There are, in fact, some trading algorithms out there, which we don't use as retail traders generally, but that would actually trigger a buy order as a stock hits a new high. And so maybe the first time it was squeezing up and hitting a new high, maybe some algorithms triggered buy orders there to ride the momentum. But maybe others have higher thresholds of relative volume, higher thresholds of minimum total volume, and so they're not going to be firing until it gets up a little bit higher. So the higher it goes, the more of those types of algos are going to be triggered to buy the stock. Now, that's not the probably majority of the volume on a stock that has really high retail interest, but it's just important to be mindful of why we want to see stocks hitting new highs. So if it ends up coming up and double topping because the pullback was big, then we definitely can acknowledge that that's a risk, and then maybe we start looking for the bull flag to turn into more of an ABCD pattern. But I generally wouldn't hold my whole position on that pullback if it does a double top. I would take profit out and then look to get back in. Risk factors. Well, stops are often pretty tight on these flag patterns. They're typically strong, but false breakouts are not uncommon. Double top rejections are also not uncommon. So confirming that there's not any really big sellers on the level 2, confirming that we're pretty close to the 90 EMA. Sometimes when you have a little bull flag occurring and it's way above the 90 EMA, it's just like, almost like just so extended, it's just so high up that of course increases the risk. But of all the patterns that I trade, the bull flag and the first pullback is the most common. Traders don't want to wait. The stock pops up, it pulls back just for a second and then continues higher. Whether that second is a 1 minute pullback, but then once it's already done 2 1-minute pullbacks and gone way up, then 1 minute traders are like, okay, it's extended. It starts to pull back a little more, and now we're starting to set up a 5 minute bull flag. And then the first 5 minute and the second 5 minute pullback usually respond well. So I would say the ABCD setup is probably a little bit more powerful because the ABCD setup, because it takes longer to form, it gives the opportunity for a lot more traders to see the opportunity as it's forming and then participate in that breakout to the upside. Both 1 minute traders and 5 minute traders, and perhaps even traders that use longer time frames like the 15-minute chart. So ABCD patterns are very strong, but ABCD patterns also have the inherent weakness that they're beginning sort of as a false breakout or a failed bull flag, but then ends up working. So the strongest stocks probably don't even wait for an ABCD setup, but ABCD setups can be powerful. Stop loss, low of the last 5 minute candle or an arbitrary stop using a mental stop. I typically don't use live stop orders for any of my trades, so it's always a mental stop. And notes that in a strong market, rather than sell a partial position into the first move, I may keep adding with the goal of not selling anything until the second or third leg up, micro pullbacks, etc. This is aggressive. Risk of losing initial unrealized profit is certainly high if I'm taking that approach of adding and adding and adding. And you've seen, I'm sure, instances of me trading like that where I added and added and added. And as I was adding, my average cost was going higher and higher. And then if it does give us that final big extension or a halt, it becomes a grand slam. And if it doesn't, it can become a big strikeout. There was a grand slam trade on costs which was a stock that was moving up with GameStop. And this incredible, I mean, this was like, this is the definition of a grand slam. It was right here. So the previous day, so I had traded it, let's see, first, I had traded it back in this area here. It had made an after hours move, strong momentum later in the day. So let's just identify the first pullbacks. First pullback right there, another pullback right here, break through the double top here, small pullback here, but we're getting later into the day, break through sort of the high here. So in this case, high day entries were a little stronger. The next day, it continues a little higher. It does give us a pullback right here, first pullback, second pullback there, and a little choppiness at the open. Then it pulls back for a day. It starts to surge back up, rips way higher, does a pullback right about there, continues. Whoops. Then, okay, let's watch this area. Still strong. Late morning momentum. This one on a 1-minute chart basically went from $20 to $28 without really pulling back, but kind of a micro weird pullback here, another sort of weird one there, another one here, another one here. Certainly getting a little trickier, a little choppy. Parabolic stocks can be tricky. After hours, oh my goodness, this thing goes from 36 all the way up to $90 a share. Holy smokes. The next day, all right, it's game time. Next day, we have our after hours high of 96. And watch right there. It breaks through the pre-market high, which was 87 and 90. And it gives a little pullback right through here. So this was a pullback right here at 96. This is another pullback right here, another one right here. Goes up from 96 to 116. Consolidation here. The next trade is along over 134. Breaks 134. Goes up to $174 a share. Pulls back again right here. That's kind of insane. That's crazy stuff. So, you know, this is one of those times where I was certainly being really aggressive, adding higher and higher and higher and looking for that grand slam. Given what was happening on GameStop, if there was ever a time to be going for it, that was the time. That same exact stock today would not perform as well because the current market environment is not as hot today as on another day. But it's always aggressive when you're holding your whole position and adding and adding and adding, because if it ends up reversing, now you're holding a big position and trying to sell as it comes back down can be difficult. So bull flags and flat top breakouts, both of these patterns are very strong. As we know, a bull flag typically has the pullback, whereas a flat top breakout is consolidation right underneath the highs. So this is sort of a flat top breakout at 267. And then this is a longer bull flag here. It pulls back a little longer, but right to the support of the 9 moving average and then rips up higher. These are a couple right here. Obviously, first candle to make a new high is right there. This is a stock that did halt. It went from $2 to about $2.60. It halted, opened higher, surged up over 4, pulls back. First 5-minute candle to make a new high. This was at 10 a.m. So we would have found this stock hitting our high day momentum scanner. It rips here on the first 5-minute candle to make a new high all the way through 517. That's not bad. Not bad at all. This is the 1-minute setup. So here we're zoomed in. If we look just on this side, this is just the 5-minute chart. And now this is the 1-minute. Of course, the 1-minute is always in the context of the 5-minute. We love to have multi-time frame alignment. And so our multi-time frame alignment down here, the first 5-minute candle to make a new high was in this area here. It definitely did a false breakout right there. It pulled back, a false breakout, but it was a green candle, and it gave you enough of an opportunity to get in for the first candle to make a new high, and then potentially jump right back out. So not the end of the world necessarily, but you know, it would have been okay. So probably a break-even trade. All right, pulls back down here, curls up, micro pullback right underneath the whole dollar of 4. Right there, and then it rips up, pulls back, 1-minute pullback right here. So if you were just using the 1-minute chart and not looking at the 5-minute, you just cover that for a second, you probably would have done a trade maybe right in here, a pullback, another pullback, maybe another one back here, maybe not though, because this is a little funny, but probably one here for the breakthrough 4, probably another one right here over 446. The 5-minute then reaffirms that setup down here at 367 or 360. Maybe not on the 1-minute perfect, but then because it's a 5-minute setup, that gives you more confidence. and but it wouldn't have given you confidence to be buying up here or in here because it was extended. But sometimes we'll continue to trade stocks extended on the 1 minute chart, even though they're extended on the 5 minute because they're so strong. Another bull flag here. This is NNDM. This goes from $1.24 to $3. Squeezes up, pulls back, squeezes up, pulls back, squeezes higher, dips off $1.50. So you can see how these are little bull flags on the 5 minute chart. Tiny pullback, goes higher, little pullback. And sometimes as the volume gets higher, the setups start to get a little bit cleaner. And I think that that's just the nature of more traders watching the stock, therefore more volume, more predictable price action. So typically price action gets cleaner and easier as volume increases and as the moves are moving faster. Another one, very clean here. I mean, if you print out a chart like that and you're sitting one day and you see a stock squeeze up, pull back, squeeze up, and then you see 2 red candles, 1 green candle right underneath 26, it starts to become so obvious. You just see it instantly. You see it as it's forming. You can see what's coming next. There's the, people say that a really good sculptor can see the sculpture inside the block and just has to remove the excess pieces. In a way, I think that we can sometimes see the chart that is about to unfold because we see these 2 candles of pullback. Now, we can see it both directions. We could see it potentially failing as well. And it's important to be able to visualize, okay, if this goes wrong, what's my stop? But it's as these are beginning to form, the pullback, that we can start seeing, okay, well, our next resistance on the daily is until here. Based on the float, based on the price, based on the current market strength, this is what I could see happening. So, we're not always going to be right, but that's what we strive to be able to begin to predict that price action. This is a bull flag here on the 1 minute that was a false breakout at the open. And again, this is very common at the open that we see real choppiness and then it ends up opening up later. As it starts to rip back up, the first pullback after signs of strength respond very well. And it goes from 22 to 32, including, it looks like 2 halts going up. So sometimes, you'll see traders who are trading it in this choppy consolidation area. And I usually try to avoid that. Just to give you a little zoom in. These areas here, yes, it's above the volume weighted average price, but it's not at high of day. We need the stock to get through high of day to really feel confident. Anytime we're below high of day, I inherently am just sort of so-so on the stock. I might trade it a little bit, maybe a dip trade, but I'm going to feel much more confident trading a stock at high of day than down in these areas below the highs. So buying pullbacks after the break of the volume weighted average price. So in this case, it surges up through the volume weighted average price here and does a micro pullback right there. Could have been a quick trade if you were willing to be fast. It does it again over here. This is below high of day, so a little riskier, but pull back here and pull back here. You can certainly see on the 1 minute chart how this is much choppier than that really clean 5 minute pattern right here. So we always look for really clean patterns like this, but sometimes the strongest stock of the day, just for whatever reason, doesn't happen to be giving us those clean patterns. Again, though, we come back to that 5 minute time frame, and that's where we often start to see cleaner follow through. So when we have a 5 minute chart forming, we can still take our entry using the 1 minute chart. It's not like we're not going to ever use the 1 minute, but we can be more aggressive trading a 1 minute pullback when it's in the context of a really clean 5 minute pattern. This one, back to a 1 minute, and again, you can see it's choppier. Did it give you pullbacks? Yes, but a little bit choppier, not as clean. Starts to open up again through here. It moves higher, a little choppier, but those little pullbacks, if you're watching the tape and you're seeing the green orders flowing through around $0.50, this is a $7.50 $0.50 entry right there, right? $7.50 goes right up to 8. It taps 8 the whole dollar, it pulls back, then pops through it. So even that little setup right there, what that has going for it is that it is a pullback. It's not a perfect one, but it's underneath psychological resistance of 750. So if we saw that behavior on the level 2 of maybe a 20,000 share seller at 750, and it goes 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, snaps through that level and rips right to 875, 775 up to 8, that's what we would start to look at. This one does seem like it was a little choppier, but some nicer moves as it was getting higher. And you can see also a little micro pullback right here underneath 7. It broke through that level and gave us a nice move. So when we're able to combine these patterns of first pullback, second pullback with half dollar, whole dollar, that can create an even stronger setup. And Jay, should we be selling off as it spikes up? The answer for me is almost always yes. Into a spike like that, I usually want to be taking some off the table unless I'm really on the offense, I'm being aggressive, in which case I might hold the whole thing and see if it taps 8. If I'm up 50 cents on it for my entry at 748 and it's holding 775 and doesn't seem like it's coming back down to my entry, then I might go ahead and hold it, let it dip, and maybe even add 798 for the break of 8. And if it holds above 8, maybe there sell around 810, 815, and then look to add back for the move up to 850. But I will sometimes be aggressive on those. So when the 1 minute is choppy and we're focusing on the 5 minute, I can see how it could be hard inside of that 5 minute chart to hold through 1 minute pullbacks, because this is a 5 minute breakout. So if you bought here and then it just rips higher, there might have been a 1 minute pullback during that. So then you're sort of asking yourself that question. I bought on the 5 minute chart for the first 5 minute candle to make a new high. The 5 minute still looks great, but then on the 1 minute, maybe we have a topping tail. Should I sell? Should I take some off the table? And then when you sell and then you look back and it does this, you think, well, the 5 minute doesn't give me any indication to sell. But most of us, of course, are using a combination of 1 minute and 5 minute charts. And so the best setups, when they break out on the 5 minute, they rip up. The first pullback on the 1 minute gets bought up. So in order to hold through that entire first pullback without taking any profit, the breakout on the apex from the 5 minute setup has to have been big enough that I can hold through that pullback and still be well in the profit. If it pops up only 15 cents and then already I'm seeing a seller on the level 2 and it looks like it's going to start to dip, I'm going to take my profit and then maybe look to get back in on the first 1 minute pullback. Because sometimes what happens, and this is not uncommon at all, is that we'll see on the 5 minute chart, I'll just move this here. So we'll see, we have the pullback here, and then the first 5 minute candle makes a new high like this, and then the 1 minute inside this candle pulls back like that, tests the initial breakout spot, it's a little low, but tests that spot, and then from there goes higher. And so we sort of get this breakout, which is a small trade, a retest of the previous apex point, and then a continuation higher. But then in the case where we have a really strong breakout, where we have the pullback here, pullback, and then it goes way up here, and then pulls back up there, I'm fine with holding that because we're still so far above our apex entry down here. So here I'm fine to hold and then add for the move higher. So the question of hold or sell depends on this candle right here. How big is it? Do we go all the way back to the high a day and higher? Or are we just kind of double topping or not even? So that really, the question of whether or not I sell quick or hold is how big is the breakout candle. If the breakout candle is really just not that big, I'm going to have to be more inclined to take some profit off the table because I could very quickly go back to break even. And traders who are in at that apex don't take any off the table and do come back down to break even, they may all panic and exit at the same time if it breaks back below that apex, and then you have that rush to the exit where short sellers are also going to come in because they recognize the weakness there. All right, so good question. So back here, we looked at these ones. I think we looked at, did we look at this one? No, I don't think so. So on this one, we have a strong pre-market. It pulls back and it goes right at the open and then rips through the volume weighted average price and kind of just squeezes all the way up here without pulling back. And then we get a pullback and it rips higher. That's a nice 1 minute pullback. On that one, that was good. Now it pulls back a little bit more, dips below the volume weighted average price and then back above it. We would actually call that a bear trap because the break below the VWAP usually is a short, and then it got right back above it, bear trap. Now it's squeezing those short sellers as it surges up. But, where's the entry? Maybe a break of high a day, half dollar, whole dollar, not one that we'd consider a first pullback. Goes sideways, dips down, dips, pops back up, little dips right here. Some of them are obvious and some of them are not as clean. But after it breaks back over the VWAP, we're back in the hands of the bulls, and you have some short sellers that are getting squeezed out. This one, a big move pre-market, and may on the 5 minute chart have given us some opportunity to trade on this move from 6 up to 9. but then it drops back down at the open and through the day is sideways. It taps the volume weighted average price once. Then it taps it again here. And then it rips through it here and goes from 670 all the way up here to a high of $9. It pulls back, and then on that first pullback goes higher. Second pullback goes higher. And so if you missed that, you could have been looking at those pullback entries. And again, this is the 5-minute time frame. It's hard to say without seeing the 1 minute whether or not there could have been a 1 minute micro pullback in there, because maybe there could have been. I'm not sure. This is one that, again, as typical of some momentum stocks, it really started to get going a little later in the morning. This was 10 a.m. to 10:15 that it starts to open up. So it kind of pops up, it pulls back. So each of those arrows represent possible areas of a little bit of a dip. This one up here, we've got 1, 2, 3 doji candles in a row, 4 doji candles in a row, and then it surges through that level. So kind of choppy there. It kept breaking over 250, the whole $0.50, then back below, then back above, then back below, then back above, then back below, then it rips. So I wouldn't have been surprised if I struggled with something like that. Back in here, a little choppy as well. I managed to make some money on it, but I could see how that one was a little choppy. There's a nice flat top breakout at 255 on this one, right? 1 minute setup, clear consolidate. Sorry, why do I have that at 250? I gotta go change that slide. Let's see, let me go in here. What slide is this? 670. All right, I'm just gonna change that here for the PDF. So this is a flat top breakout at $8. I think I had that from the previous slide. All right, so that's updated on my end. All right, so whole dollar breakout there at 8. Nice move up to 850. And this one is the same. How many? Golly. Oh my gosh. All right, well, it looks like I've got a couple here that are not titled correctly. Okay, so this one here, 665, right there, squeezes up, pull back, and goes higher. So you can see very clearly that could have presented some nice opportunities. So this is a flat top breakout at 665, right? Very clear. Consolidation, surges through the level. Up to 695, dips down. First 1 minute candle makes a new high, and it rips higher. Not a crazy huge move, but definitely moving. This one, flat top is at 699. So let me update that slide. Flat top is at 690. Well, I'll just call it $7. So $7, whole dollar, because the whole dollar psychological resistance is really the level that we would have been watching. And it's definitely worth noting that you don't have to trade every single one of the setups. You can just wait for the good one to come to you. Sometimes they do just go higher and higher and higher. And this one, 255 was the right spot. But that one may not have even been the absolute cleanest setup. So it's okay to wait for the good ones to come to you. And if it means you miss some along the way, that's okay. $7 though, that's very clear, and it's on the 5-minute chart. So very nice move. Another one here, this was at $26. So let me fix that slide. And I think this is the last one that was like that. So $26. Flat top breakout. So double top there, it surges through, and then from 26 up to 30. That's a nice move. Now here we've got 1 minute, 5 minute false breakout, and then a rip. Now this is kind of always interesting when we have this type of move. So the 1 minute squeezes from $1.40 all the way to $3.60. The first proper kind of 1 minute pullback, it pops up, runs into a wall, and drops down. So it's kind of a false breakout. And then even right here on this candle, on the 5, it makes the first 5 minute candle makes a new high. But this is an example where at that point, it was really extended off its 9 moving average. We had a couple of, topping tail candles. But, maybe you would have taken the trade and you probably would have lost on it. It did not work. It pulled back, but it didn't just flush. And the volume on the pullback is light. And so there we're starting to get an indicator that, okay, it's a light volume pullback. This may actually curl back up. And as it pops back up here, now we're right underneath the highs. Consolidation, and that's the spot to be a buyer. The break through that level. So it's kind of like, it's kind of a pullback right here, and then you've got another little pullback here and another little one here. And the 5 minute is not a picture perfect bull flag, but it does work anyways. First pullbacks after parabolic squeezes begin can be very strong. So this is a parabolic squeeze here, and the first pullback would have been as it broke from 6 and ripped up to 8. pullback right down in there. So let me get the magnifying glass. So a little pullback right here, micro pullback. Another one right here. It rips higher up to 12, which from 8 to 12, from 6 to 12 by itself is 100%. That by itself is a big move. But the first pullback, second pullback, it's going higher. It halts up at 14, 14.50. It opens, it dips, and then it rips higher to 20. Halts going up to 26, up to 30, up to $38. And then the first halt going down, flushes hard. So we do not want to be buying the very tippy top on those. They go up, 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 and then when they reverse hard. And so the first pullbacks, as a parabolic squeeze begins, are definitely worth watching. So now let's get into some live trading. All right, let's see. Let me get this up. All right, so copy that link. All right, so let's see what we have. All right, now let's see. Before we do that, let me just grab this. So I put in a special request, and it looks like someone has delivered. All right, let's take a look at this. Here we go. So this is not bad. I think that, if I'm going to be honest, that's not bad at all. That's very nice. So this is our before, and this is our after. Well done. Very well done. Look at that. Beautiful. All right, we'll see if anyone can top that. All right, so let's look at our first flag pattern here. Okay, so 5-minute bull flag resolution. Clean 10K, 70 cents a share. Okay, so let's look at this. All right, so the first 5-minute candle to make a new high, can you visualize where that is right now and where a potential target would be? It looks like it's over 1250. All right, so 1250 is a possible entry. It's the $0.50, so that makes sense. Target would be 13. We do have a little bit of a red flag on this, which is that the high of day candle was red. And I'll move, yep, sorry about that. Let me move my video down to the bottom corner. Okay, so let's try it now. Okay, so there you go. So we've got 1250 right in here. First 5-minute candle to make a new high is 1250. Now check the time. It's 10:54 and 55 seconds. So we have 4 seconds left, or 5 seconds. In 5 seconds, this current green 5-minute candle will close. And we have a very clear flat top at 1250. So let's watch 1250. My order's at 1252. So let's watch as it comes up. Am I going to take a trade to anticipate the break? Now, I don't know. I don't remember. What am I going to see on the level 2 here? I may have already seen something on the level 2 that's going to give me a reason to be cautious. So right there, I decided to buy the dip. Okay, now that's aggressive. A dip at 22 is aggressive. However, a logical stop on this could be just below the $0.50, right? So just below the whole dollar, so 12. So stop at about 12. Let's watch this. Now orders at 52, 61. I'm moving it up just a little bit more. We're up 210% with 27 million shares of volume. There's 30, there's 34, there's 35. See the green on the tape? I'm adding. I'm adding into this breakout. There's 40 on the ask. That looks perhaps like a hidden seller at 40. We're seeing buy orders going through and it's not breaking. 42 seller. I'm adding. Now I've got 10,000 shares. My cost basis is 32. So this is in my exact entry, a little more aggressive because I did a starter on a dip with a stop at 12 and then added as we got closer to this level. So I now have 10,000 shares before the breakout. So my new stop, once I add, I usually try to move that stop up a little bit. Let's focus on the apex point here of 1250. Because 1250 is the apex point. That's the true correct entry for the first 5-minute candle to make a new high. So the correct entry right now hasn't happened. So if this drops back down to 12 and I get stopped out, I might look at this and say, why were you in at 1232. Look at that. Let's back that up. So where's your apex point? Your apex is 1250. So you have your order at 1250. You're ready to go. Look at how fast. So it happened so fast. In that moment, I missed it. I probably would have loved to have added, and I wasn't able to because it broke too quickly. So we've got 1231 by 1240. So watch this here. All of a sudden, it rips just like that to 1270. It's so fast. 1277, 1275, I'm taking half off the table. So if you had bought that just for the break of 1250 and you were quick enough and gotten filled, you're still at a winning trade. There's 13. So it's still a winner. You got in at the correct point. You would not look back and say, was I in too early? You know, I didn't have confirmation. I should have waited for confirmation. I got in at 1232. It dropped to 12 and I lost, you know, with 10,000 shares, $3,000. Why didn't I wait for confirmation? Your intuition is going to guide you as you get better at trading to jump in early, to not wait for the confirmation, but to get in to anticipate the break. So what are some possible reasons why I would have felt confident in this example, anticipating the trade? We have a very clear 5-minute pattern. We have a stock that does have news related to COVID. It's certainly a big gapper. It's probably our leading gapper. The float on ABIO as of today is 9 million shares. The 5-minute, yes, we have 3 doji candles in a row, but a clear flat top at 1250 and generally lighter volume in the last 2 candles. The fact it's already made a big move, this is the logical spot that people are watching. If I was short, where would my stop be? Probably at 1250, definitely at 13. So I expect over 1250, we're going to see a surge. So the initial entry down here, and we can't see because this is a period of time where all my live trading, I was hiding my P&L. So we can't actually see exactly how much I was up on the day. That is a technique that I will use to reduce my emotions, to not look at how much I've made or lost, just to focus on the chart. So in any case, so here it pops up, it dips down. And, you know, I probably, given the fact that it was so strong here and then dipped and popped, it's already dipped and popped right back up so quickly that I probably would have wanted to try to get in on the next dip. So it dips to 12. There's 17 and I pick it up. So I get filled a little high, even though I saw 17, that's slippage. So I press the buy button. It looks like I should fill at 17, but there's only 300 shares for sale at 17, right? So I end up filling at a 22 average, 4,000 shares. Orders, I move it up just a little bit. That way, here's the thing. I could add a little higher now because I'm in at a good price. So I give myself a little more room for slippage. It's already a stock that's made big moves, so I know it can move quickly. There's green on the tape, 25. There's a stack of sellers at 25, but then it breaks and goes to 30. More green, looking good. Adding there, I'm thinking this is going to be the moment. There's 40. Okay, seems like possibly a hidden seller at 40 because I'm seeing orders going through and it's not breaking. And then an order tucks in under the ask at 38. It's not breaking. Then it breaks but goes to 42 where we have a seller. 13,000 shares. It's got 27 million shares of volume. So that seller's not the end of the world. And does it break? No, it's still struggling there. And then it flushes back down again. Now I'm in the red. Order's still at 61. Now I think what I probably do here, I move my mouse and I wonder why I move my mouse off that buy button. I just kind of clicked it just to align it and it broke through that level. So right here, green, all that green, I would have been certainly pressing the buy button there if my hand was on the buy button. So this would have been a buy. The best buy would have been at probably 40, you know, between 45 and 48 as we were seeing that big block of green coming up to this level. And then as it breaks through that level, it immediately pops. And if you press Shift 1, you might have filled at 1270, right? You might have filled at the top because by the time you press Shift 1, it was, you know, it was up at the top. It was a little high. So it's certainly possible. that you would have not gotten filled if at a good price if you just press shift 1. But let's say you're in at 1250, which is the official first candle to make a new high. You're in at 1250. You could throw half on the ask right here like I did and take some off the table. So I took a little off the table there at 1269. I take a little more off at 1266. And now right here is the moment of truth. Does it hold 1250? So it broke the level. It's coming back down and retesting it. This is where I might today dip trade this long at 58. As long as it looks like it's holding 50. Now that's not a first pullback, that's a dip trade, but we'll get into that later in the Momo chapter. So there's 75, there's 80, lots of green on the tape. There's 97, a quick flash higher. Sometimes when you see those quick flashes, those to me might be a market order. You know, someone just presses the buy button and it just kind of rips up to that next level. There's 95, 99, 94. Orders now moving up to 1308. Hands on the buy button. Look at that. Oh my gosh, it just ripped without me. Okay, let's back that up. Look at how fast that goes. So when they start moving fast like that, if you're short, all of a sudden, this is where panic sets in. You're like, oh my God, halt level's 1352. This is ripping. This might get halted going up. So I'm up 27,000 on the day. So I was already in the green, had a cushion for sure, and was willing to take a little risk and try to roll that into the next trade. Let's look at the next one. So this is going to be first 1 minute candle to make a new high. Okay, so let's back that up. It starts kind of like right at the apex. Okay, so can we get the quality a little bit better here? So we have this squeeze here. This actually is one of those examples where it opened low, rips up, pulls back under 15. So under 15 would have been a possible trade for the break of the half dollar, whole dollar. And it's a 1 minute pullback. It squeezes up to 17. And right here, the high of this red candle, I'm using that as the previous candle's high for my long. It looks like it's around, I don't know, 20 or something. So I got in at 19 and 20 to anticipate the break. There's 38. Now here, I put an order to take a little off the table, knowing that this stock is extended and it's breakout or bailout. So right here, I'm already starting to think about bailing out. I get in, but you see how even when I get in, look at how thick the level 2 is. Can you tell that that's a more thickly traded stock? There's a stack of sellers there at 18, another stack at 39. So it does break, then goes to 31, to 38, but it's stacks of sellers. Can it break through that wall? A big stack at 39. So would you think that maybe this has a higher float? And the answer is it does. ACB, the float is 182 million shares. It's not that it's not moving, but you can see it's kind of hitting these levels. Now it's got a level at 1660. Is that an algorithm, algo type of high frequency trading issue? I don't know, but new order goes at 71. If it can break 60, 1,000 shares, adding there, it starts to move a little higher. 82, I take a little off the table into that breakout. New orders at 17. Now, if I add here at 17, that's a whole dollar entry. That's extended, obviously on the 1 minute, but clearly it's strong. It's up 48%. It's 12 million shares of volume. So it may make sense, but then look at that flash back down to 46, back to 38. Now it's risk management. Can I sell the rest break even? And I don't remember what I do, but let's replay that. All right, so back to the top. First 1 minute candle to make a new high. All right, so first 1 minute candle to make a new high is right around 22. So I'm in there. We get the first first 1 minute candle making a new high. It's early in the day, 9:45. I add there at 39, thinking that, okay, we're moving up. My new cost basis is 24. There we go. There's 50. There's 60. Time to take some off the table. I put an order 1 cent under the ask. So because this is a higher float, I'm putting my order under the ask. It's a hidden order, so it's not showing on the level 2. So that means if someone presses the buy button at 60, they're actually going to buy my shares at 59 first. Hey, they got a better price, so they're happy. They got in at 59, says 60. I'm happy because I'm out of the trade. And I fill 1,500 shares, no problem. I put another half out at 58, 1 cent under the ask. I fill that with no problem. So that's shaving 1 cent under the ask on a higher float stock or a stock with a bigger range, much more likely to use that strategy. I then add back there on the breakthrough high of day. So this is a high of day break on the add back. Target 17, the whole dollar. taking some profit off the table as it's moving higher. So yes, that hotkey with an offset 1 cent below the ask would have been a hotkey that I used. So what I probably would have done on that day is clicked into the settings and gone in and adjusted my hotkeys to accommodate this type of stock. Remember how we accommodate, as a skier, we use different types of wax for different types of ski conditions. When I was skiing last week, the snow is really, really sticky, and it was so sticky you could be standing with your skis right like this, pointing downhill and not moving, and having to kind of like go like this. And I'm not professional to the level of bringing wax when I'm going just with my son, so it was not great conditions. But if you were racing on a day like that, you would have been prepared for those types of conditions, and you would have had to accommodate accordingly. So with a stock like this, using that offset makes sense. On another stock like GameStop, the offset of 1 penny is not enough. I actually would have to use a bigger offset. And on another stock, I might use a 3-cent offset, or I might not use any offset at all. If I don't have to, I don't have to. But if I'm having trouble getting my orders filled, then I'm going to consider using some type of offset. Okay, so let's see. Let me bring this back down here. Let's see. We've got this here. Okay, so next one, right here. Okay, so bull flag approximately 14 minutes in. All right, so this is a long video, looks like. So 14 minutes in at around $2 something. All right, so what are we working with here? Not sure. Is this NNDM? Okay, NNDM. Yep. So first 5-minute candle to make a new high is at what price? Approximately $219. I just bought 10,000 shares at $217. That's right underneath the breakout. That is fine. That makes sense. So on this one here, you can see on our 1 minute, around $217 is resistance, about $2, $206 is support. So I'm in with about a 10, 15 cent stop. That's not too bad. No, I'm not in yet, so I backed up the video. So let's just watch this here again. Notice those big sellers? Big sellers on the ask. But it's 100 million shares of volume. Let's check the float on this one. NNDM. 45 million share float stock. So it's a little on the higher side. I feel comfortable using 5,000 shares as a starter. Lots of volume, very liquid. In there as that seller's starting to come down. Let's back that up again. So order is ready at 222 to anticipate the first 5-minute candle to make a new high. The stock's up 179%. Clearly, it's a momentum stock that people are paying attention to. So it makes sense that I'm stocking it for a good entry. I'm watching it very closely. Orders at 22. I'm seeing green. So yes, there's a seller, but the seller's getting bought up. So not shift 1, click the buy button, 5,000 shares. Boom, 10,000, clicked it twice. Once, twice, in. Added more right there, 15,000 shares. There's 22, there's 24. Okay, so on stocks of this price range, not only do we have issues at the $0.50, $2, $2.50, $3, on the lower price stocks, we can also have a little issue at quarters. So $2 to $2.25. Then above $2.25, we're clear to $2.50. Above $2.50, we're clear to $2.75. $2.75 to $3, $3.25 to $3.50. $3.50 to $3.75. Once we start to get a little higher, they'll start to jump through those quarters without as much of a problem. But in the lower price range, we can have these little issues at quarters. The high on this is only like 28. So I'm already thinking that we're going to have a little issue here at 250. 225, sorry. So there's 23, there's 24. So all that work, and I'm up 3 cents a share. Now with 15,000 shares, that's $450. But this is a first 5-minute candle to make a new high. I'd like to see a little better resolution. So we break out, we pull back. So sometimes we'll shake out a couple traders there. And now watch 24. Okay, it's not ready yet. 24, there's a seller there, 24, coming down. Another seller, 25, coming down quick. 26, 27, 28, 29, 30. 15,000 on the ask. 14, 13, 31, 32, I'm taking half off the table. 30. I'm taking half off the table because that is a nice candle. That's a pretty big green candle. I mean, you look at the context of this stock on this day, that's a high volume candle. That's a nice green candle. You take that, a trade like that, one a day. If you can wait and be patient for that one good quality setup. Now, we may not see a perfect bull flag every single day. And of course, it's hard to sit here until 12 noon not knowing whether or not you'll even have it. And there were other setups on this earlier, but they weren't, well, this one was okay, but this is a lower price stock, and these ones can be a little tricky because they trade in, tight ranges. So, realistically here, we're talking about, I'm up right now 8 cents a share. At the most, I was up 12 or 13. It's not a lot. So let's back this up here. So to the entry. So we're going to go long here. $5,000 shares. Boom. Wait. Right here, 18. Boom, boom. Long at 18, 15,000. Nice quick move there up to 24. Now we're going to look for a little pullback. Then the pop through 24.25. Retest that level. I hold. Sometimes I would add right here 24.25. New orders at 32. Right there. Did I add? No, I guess I didn't. Okay, so there's 26, 27. It rips pretty quickly here up to 30. Nickels and dimes kind of going up from 25 to 30. 15,000 share seller. Through that break, I take a little off the table. If it can hold 30, then we're starting to look at 35, 40, 45, and 50. Oh, I did. I have 16,000. I guess it just was slow. Anyway, so yeah, added a little bit. And the thing there is, if I believe in the stock, I do want to keep adding to it. So added to it. We got the break there. Didn't add big size, but added a little bit. Adds an extra, $60 or whatever. It's fine. And now we've got 32 on the ask. So I took a little off the table at 32 and at 30, it looks like, into that move. Now holding 3,000 shares. Now, what we're going to look for here is the first 1 minute pullback after a fresh 5-minute breakout. We just got a fresh 5-minute breakout. And a lot of traders likely missed that breakout. It happened so fast. So if they missed that breakout, now they're going to see this stock hitting their high day momentum scanner. It's right down here. High day momentum scanner. So it's hitting the highs. And now they're saying, okay, this stock is strong. Can I get the first pullback? Can I get a dip trade on it? So now we're looking for a dip trade long. And not necessarily a dip trade. We can be looking for a proper 1 minute pullback. Now, if it comes all the way back down to 18, then that's kind of not great. I actually put a stop there at 19. So this is one of those times where I probably said, all right, guys, stop at break even. Now, I don't do that a lot, but we can, of course, set a hotkey to set a stop at our average position price. You can refer back to the chapter 6 where we talk about hotkeys if you don't recall that, but you can certainly do that. And in this case, I did it that way. I can just kind of take my hands off and say, all right, let's see what this wants to do. Look at that. Stopped at break even. So we would say that that was a false breakout. But even though it was a false breakout, it was a green trade because I was quick. So we look back on the 5-minute and we're like, wow, that's pretty gross. This did a pullback. It ripped through the highs. And look at that. That's a false breakout. That's a bull trap. Not if you're quick, though. If you're quick and you're nimble, you easily could have been in there at 17, 18, add at 25, be out at 30. It comes back down, you're out. If you're still holding it long, there's no good reason to still be holding it long. It is rejected. It is not clean on the 1 minute. It is not clean on the 5-minute. This is bordering on a bearish engulfing candle. It's a big red candle. And despite the fact that we had a big green candle right here, this just was not strong enough to continue to hold that level. Now, could you get a dip trade off of 2? Possibly, and I don't know if I end up taking that here, but sometimes you get a bounce off of 2. It looks like I'm kind of maybe dialing in for a bounce because I'm thinking, all right, well, if I was short, where would I cover? But it doesn't look like I get that. So actually, as it turns out, so this is fast forwarding. It bounced off of 2. I don't know if I did a dip trade on it, but it bounced off 2 and it actually ended up slowly recovering back up to the high, going up to the very high. And now here we've got another setup, which I don't know that this is the one or is one that's worth going over because I don't know if it's a pullback setup, but it looks like we do have a little bit of a flat top here at 41. My new order is at 250. Let's see what this wants to do. Does it want to move higher? Okay, so let's back this out. Let's go ahead and watch this. So I don't think that this is it's not a proper 1 minute pullback, or it's not a proper 5-minute pullback on our 5-minute chart. The 1 minute is a little bit of a flat top. It's not quite an ABCD pattern. It's not perfect, but you can see how this is consolidation right under this 42 level. And of course, the psychological $0.50, if that breaks, that could be good. That's right. Jack be nimble, Jack be quick. Jack avoid the red candlestick. High of this candle here. Okay, so here we go. So right now I've got my order at 50, a buy order for 4,000 shares. So I'm going a little smaller than my last order. And I think I'm going to hit it 3 times, which will give me the 12,000 share position that I just seen. There we go. Green. Well, green there. Okay, so back that up. Okay, let's watch this again. Green at 39, green at 40, little red, green. There we go. Now we're opening up $0.50. Buying into the break of the $0.50. I'm in at 43. Can I add at 47.48? Watching 47.48. If we break through that $0.50, psychological resistance, and we can hold above it, next target 275. Back to break even. Moment of truth right underneath a $0.50. This is that typical kind of hitting it and pausing. If you were short, you might start thinking here at 47.48. Uh-oh. This is, looking kind of strong. If you're long, you might be thinking, okay, I want to buy. So we're looking for more volume, more green. It's churning here. I can see a seller there at 50. If it breaks and cracks that level, that's the $0.50 setup. So this is also a little bit of an example of a $0.50 breakout. And we have an entire chapter in chapter 8 here, or entire section that's dedicated to the $0.50 setup, but this just happens to be one here. There we go. So see that countdown? Let's back it up. So 250. So how many shares? 20,000 I think we had. 20,000, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4. Snap through that level. 51. My order's at 52. That's not a convincing break. That is not a convincing break of a $0.50. But we do have a pretty big stack of buyers here at 50. I took some profit out. And then it flashes right back down below. $0.50, whole dollar. A little bit of a false breakout there. On a cheaper stock with a slightly higher float, that's going to be a little bit more common. So now we're back below it. And, this may grind higher, and it seems that it does. So this is one of these stocks that sort of chops around here. It's below it. And then we would say, well, what's the high? The high is 53. So if it can break through 53, if you hadn't already stopped out short, then 53 is the spot where maybe we'll see a little bit more volume. So sitting at 44,000 on the day. There's 52. There's 54. My orders, hey, what do you see on the bid right there? 150,000 share buyer. So we've got a big bid right there. I'm long, 8,000 shares at 53 because of that bid. There's 57, 58. Now are we going to get that extension, that kind of ramping liftoff of increasing volume as we pull away from 250 and move towards 260, 270. Now let's back that up a second. I thought I just saw another big bid at 60. Watch this. Okay. It's game time. So what does that tell us? Another big bid, 170,000 shares. Well, it could be, and you could certainly, this is not ethical and it's not something you're actually allowed to do because it's order spoofing. But some people, they don't care and they'll just do what they want. So you could put a buy order and you could say bid. And I could put a buy order for 150,000 shares. Let's just say. Let's just do 15. Well, but let's leave it 150,000. So just like that, shift 1 is now a buy order. And none of these stocks, I'm going to have the buying power to do it. But, shift 1, just like that, I'm going to put the buy order on the bid. So, you could have someone that goes out there and is trying to put that big bid out there to force short sellers to squeeze. Maybe to encourage long traders to get in as a bull trap. And then immediately they're going to pull the order and it flushes back down. It could also mean that someone genuinely wants to buy it. We don't always know. Because we, as usually a more sophisticated trader, we typically would hide our orders. Yes, order spoofing is a form of manipulation because you're trying to scare the market. And so you're not allowed to do that. So there's regulation, of course, that say that you can't do that. If you do that, you can get penalized and sanctioned and then not allowed to keep trading. And a broker, if they saw you doing that, they have their own internal compliance systems where if they see someone routinely putting out 150,000 share buy orders and canceling it, orders out, cancel, they're going to flag that. And they're going to come to you and they're going to say, they'll give you a chance to explain yourself. And you'll say, oh, well, I don't know. That's just how I trade. And they'll be like, okay, this is why we're concerned. If we keep seeing this, we have a duty to stop that because, they're regulated. So brokers internally regulate, and then they can, of course, report you to a regulatory agency and say, hey, because they want to say, listen, we're doing our part. We're doing what we can as a broker. So this is us showing you, hey, this is what we found. You deal with it from here. So because as a more sophisticated trader, we generally hide our orders. Someone that's not hiding their orders, it makes you wonder, are they sophisticated and are they intentionally not hiding their orders to, kind of do something in the market? Or is it someone that doesn't know? Is it someone that is trading with really big size and doesn't know they can hide their orders, or is using a broker that doesn't let them hide their orders? And perhaps this is a big buyer. So we don't always know. But short term, typically a big buyer like this is going to propel the stock higher because the general response is that, well, it looks like a real order. So let's keep going. Now watch here. Let's watch as the price goes higher. It's still there, and that order is getting filled. So that person just filled 170,000 shares at 60. Real order. Now, did they cover a short position? Maybe, right? You have to buy to cover. Did they buy a brand new position? We don't know. There's no way to know. But that order did go through, so it wasn't fake. Or if it was intended to be fake, it certainly filled. So the high here is 53. And, you also have to recognize that there's brokers in different parts of the world that allow you to trade the U.S. market and may not enforce U.S. regulation in the same way as a U.S. broker. So, you may have some shady stuff that happens from time to time. And you just recognize that, this stock seems to have something funny going on. But with 126 million shares of volume, one person's 150,000 share order is kind of a just grain of sand. It may not be, it's significant when you see it on the level 2, but in the grand scheme of things, it's still a pretty small order. So we're back here at 69 and stacked up a little on the sell side. There's 70, there's 71. Now, what I can tell you is happening right here, it appears that I'm having some latency. Quotes don't move that slowly. So, this is, again, one of those times where I don't know at this moment where I'm trading from. I don't know if it's from my house. I'm not even sure what year it is. But for whatever reason, right here, all of a sudden the quotes start to slow down. You can tell that things are just sort of getting jammed up. So a little bottleneck there, and then it starts to open back up. Could be so right there. That was my own computer. When this was happening, I was getting so annoyed. This is not acceptable. This is not acceptable that the Creative Cloud is slowing down my computer to do some stupid update. So stuff like that, it's little, but that type of stuff really, really annoys me. So that's where eventually I would have said, all right, what the heck is going on here? And I would have gone down to the Creative Cloud. So Creative Cloud, this is Adobe. And I go in here and I say, all right, so I've got to change my, I'm sure a lot of you guys use this stuff for your work or whatever. So anyways, you go in here and you change the update settings. And sometimes your computer will also, let's see, so always keep the cloud up to date. So I actually only installed it on this computer recently. So I'm going to go ahead, notifications, I'm going to turn those all off. So I'm doing this here so this doesn't happen on this computer. And I'm not going to always launch it at login because I don't generally, I use it pretty infrequently. So anyways, and I don't mind doing an update now. It's fine. I can do it later, but I don't want to be enable auto update. Nope. And I don't want to do that. So this is one of those things, now it's checking for updates. I can do it later, but we have so many things running on our computers that, something like that in that moment, you know, that could have cost me money. That could have cost me a lot, potentially, depending on, you know, what I was trading at the time and this and that. So I'm going to go ahead and click these updates now, and then the next time I go to use those, they'll be ready to go. But anyway, so that's aside. So all right, let's back out of this here, and let's go to the next one. All right, so buying the first pullback. We covered this, so just a quick review on this one. All right, so so we covered this in the gap and go section. So first 5-minute candle to make a new high was right around 250. And I believe on this one, I did a trade to anticipate that breakout. So I got in just a little bit early. All right, so there we go. I'm in at 247 for the break of 250, $0.50. Can it snap through that level? Right now it's struggling a little bit. We want to see it crack that 250 spot. Orders at 251 to add. Can we break that level? 248, 249. There we go. Snaps through that level. Take half off the table into the breakout. No, I'm going to hold. Okay, in this case, I held. We're at the open. So now we retest 250. We dip below it for a second. We get right back above it. Now 258, 259, the next level for the move up higher, pulling away from the $0.50, showing that it's breaking that level with conviction. Again, on this particular day, I traded a little bit more on the offensive. I didn't take that quick profit and then jump out. It just kind of kept going. So let's see. All right, so let me just check my broadcast here. XRF, yeah, no, it looks good on my side. Let's see. I see some of you guys are saying maybe right as I did the update, but I don't know why. Because I have two machines running. I have this machine, which is, doing the update, but this is the machine running the broadcast. So that might be something else. So try just hitting the refresh. Okay, so anyways, so that one we already talked about in the gap and go, so I don't want to dwell on that one. We've got a couple more examples. So let's look at this, DEE. So miss good entry, put myself on defense, then chase the second entry. Okay, so what do we have here? Oh boy, I don't like to see that. So I'm logging in, and when I see global trading level set to all trading allowed, P&L is greater than 49.90, that means I'm probably red on the day. I'm red by $1,300 right here. So that warning message will come up in light speed if you are, basically as soon as you go red on the day, it says, hey, FYI, we're letting you still trade, but this is your line in the sand. Okay, so back to full screen here. All right, so DEE, it's this stock right down here. It's easy to borrow, 100% margin, cash required, not marginable. Let's see what the float is on this. Looks a little thick. DDE. Oh, it's not available anymore. So the stock has changed symbols or been delisted or bought out, merged. So I'm not sure the float on it, but that's fine. Doesn't really matter. So look at that choppiness on the chart. Look at that. It's just consolidation right here. So many topping tails. So this is actually more of a break through the high of day setup. I drew that line there. Break through the high of day. Orders at 25. There's 21, 23. Look at the seller stacked at 25, very common. And I fumble the entry. I miss it. It goes without me. I then chase it with 100. Oh my gosh. One of the times you actually get a really nice rip despite those candles, those sort of topping tail candles. So now where do I buy it? Can I chase it up here? Well, we're near the $0.50, so I could possibly do a dip for the break through the $0.50, maybe. So 44.45. Order moving up here to 47. It's kind of unusual. I put it at 47. Usually I'd put it at like 51, but I guess 47 must have been the high. Green on the tape. We'll look for green to do a dip trade. Do a dip long on the first micro pullback. This is a micro pullback. Dip long there, micro pullback. Pop over 50. There's 49. There's seller at 49. Looks like the float is 16 million shares. It's hitting my scanner there. So there's 47. Can we break through that $0.50? Give me a break. Come on. This is a struggle. We're already struggling here. Put the order to add. If it does break through, it should snap. Uh-oh, 5,000 shares. Someone's getting aggressive. I'm definitely chasing it. Probably feeling a little FOMO, a little annoyed that I missed it. Now I'm red. Red candle on the 1 minute. That's not great, but I might not even notice it because I'm staring here at the level 2 in the tape. So that's not perfect, but lower volume. $43, big burst of green. $44. Now we, snowball starts to kind of roll, starts to build up a little speed, a little momentum. Nope, slowing back down. $43. 44, 45, 44, 45. Here we go. 44, 45. Come on, more red. Struggling. I'm break even. Breakout or bailout? I should have already bailed. I'm holding on to it because I'm being stubborn. I'm frustrated. I had a great idea at 25 and I missed it. Now it comes back down, 35. Should have already bailed. I can wait for the first 1 minute candle to make a new high, but realistically, it should have already gone. I could always get back in first 1 minute candle to make a new high. I had the opportunity to get out flat. I could get out basically flat right here, but clearly being a little bit stubborn on it by holding this long. The 5 minute is extended. The 1 minute is starting to prepare a 1 minute candle to make a new high. So I'm already holding. Oh, no, I did the smart thing and I sold break even for a $50 loss. Fine. Orders at 50. I can get back in if it gives me a reason. So I can always get back in. There's green on the tape. 43, 44, green. 45, good. Can we get 46? 45, only one seller. Now 46, only 3. 4 sellers, 3 sellers, 2. Oh, whoops. All right, so what was that? Looks like I jumped out to something else. So let me go back to here. So it looks like, I don't know, it looks like it might have broken and then the video ends. So it kind of pops up and then I don't know what happens there. Hits a high of 44 or something like that. So in any case, breakout or bailout, I should have been out faster. All right, let's see. One more here. And let's look at this, May of 2020. Okay, so if this was May of 2020, this is when the market was pretty hot. All right. My power just went out. I hear my generator just kicked on. So, did I lose my internet connection? Nope, my internet's good because I'm on the uninterrupted power supply. But my mixing board, okay, so now the generator power is on. Mixing board audio is going to come back on. My monitors are back on. And let's just finish this example and then maybe we'll call it a day. Uninterrupted power supply for the win. All right, so MRSN. So where's the entry here? Was this just a... I think this might have just been an example where I didn't have the trade. I just was showing the example, which is kind of lame. But anyways, it was the first candle to make a new high right here on the 5-minute chart through 1950. And I think I must just hit the record because I was like, oh, look at that. It's a bull flag breakout. 1950, $0.50. It squeezes up to 1970. Could have taken a little profit there. It dips back down a little bit. And I don't know how high it goes, but 1978, 1980. So anyways, I guess that's a fine way to end the class. Just a small little example, but yeah. So as you go through the live trading archives, our next chapter is going to be, and I'll just put this down here. Our next chapter is going to be chapter 8, long setup number 2. So we're going to continue on here, and yeah, as you watch the live trading archives, if you watch the breakout or bailout, or sorry, the breakout trading chapter, which I believe is chapter 11, you're going to see a lot more examples of those very quick trades, getting in, getting out, the quick breakouts. So as you continue to watch those, you'll see more instances of the first pullback, trading around the level 2. And again, the more examples you see, the more you watch it, the better you'll get, the more comfortable you'll get at understanding the strategy. All right, so with that, I think we'll call it a day here. And my light's out and power's off. I'm on the generator. I don't know what happened, but it's not snowing or doing anything. But maybe it's not even windy. I don't know. but power's out. Internet's still on, so that's good. But anyways, we'll call it a day here. It's Friday, so enjoy the rest of the day. Enjoy your weekend, and we'll be back first thing next week with Chapter 8, Setup 2. All right, so we'll keep it going. Thanks, you guys. See you for the next class.